No matter how much you quarantine, you have to eat, right? So eventually you'll end up at the supermarket. But COVID has finally brought the supermarket to us. Derrimon Trading is among the companies that has rolled out online grocery shopping, and they're doing so for their shoppers at Sampars and Select Grocers. They claim this has helped them become COVID resistant. But what does this mean for the company? And what can we expect from their upcoming additional public offer APO? I'm Kalila Reynolds, and it's time for another episode of Money Mondays JA, brought to you by Proven Wealth. Derrimon Trading Company operates the Sampars cash and carry chain, two Select Grocers supermarkets, one in Manor Park and the other in Crossroads, Caribbean Flavors and Fragrances Limited, Woodcats International Limited, and a distribution hub located at Marcus Garvey Drive. Yeah, they've got quite a bit going on. Now, with all these companies in the group, Derrimon Trading made some big announcements at their annual general meeting, AGM, on September 25. They're planning to expand. They also say they're COVID resistant. At a time when many businesses are contracting, Derrimon is reporting increased business. They've even hired more staff to work both in-store and online to handle the extra demand. Now, as the company's chairman and CEO Derek Cottrell put it, there's no substitute for food, at least not yet. He also said that notwithstanding the extra activity, there were no reports of COVID cases in any of their warehouses or retail chains. In addition, Cottrell told shareholders that the company plans to grow the business by expanding both its local and international markets.
Derrimon continues to look to grow. We think it's very important that we look for the opportunities to grow, and we have identified some opportunities, not just locally, but overseas. And over the next few months, we'll be pursuing them. We think it's important that we diversify the business. We believe we should diversify the business, not just in the existing industries that we are in, but we also need to diversify outside of the existing industries that we are in. But more than anything else, we believe that there's deeper ways we can grow our business within the existing industry. And as we can see, the food industry has proven to be very resilient in this COVID-19 crisis, which we expect to last for a bit longer.
Now, during the last financial year, Derrimon more than tripled its warehouse capacity from 30,000 square feet to 105,000 square feet at Tom Kringle Drive off Mandela Highway. Big move. Cottrell also said that Derrimon will be rolling out a new information technology system that will bring all the operations under one platform.
If everything goes to plan, we'll implement this new IT system by the end of the year. Also, I should note that this has been an enterprise system. It will be able to put all the businesses on one platform. Now, we won't be doing that at the end of this year. We're going to start with distribution, and we're going to put Sampars on. Then CFF and Woodcats will come on the same platform. So it will make our accounting system a lot better and make reporting faster and more efficient. So this is a major thing that we're doing.
Now, let's talk money. Chief Financial Officer Ian Kelly reports that the group made 10% more profit between January and June this year compared to the same period last year. That's $184 million in profit, or about 1.3 million US. Total revenues for the period were $6.3 billion, about 44 million US. Kelly says the growth is coming from the company's retail segments, Sampars and Select Grocers, along with Caribbean Flavors and Fragrances, CFF. I have another recent video about CFF. You can click the link up here or in the description below to learn more about that company. Now, at the AGM, Derrimon's shareholders approved the board's request for an additional public offer APO. Remember, we've spoken a lot about APOs. That's when a company increases or creates additional shares and offers them for sale to the public. So Derrimon shareholders also approved preparatory steps for the APO by allowing the company to increase the number of shares in the company to as much as 1.8 billion units. Importantly, management can decide to issue some or all of these new shares in the APO, so we don't know the size of the offer just yet. However, we do know that they plan to raise more than $360 million because they've already indicated that they would graduate from the junior market to the main market of the Jamaica Stock Exchange. Now, when Derrimon listed on the junior market in 2013, their share capital was $140 million. Remember, the junior market is only for companies with less than $500 million in share capital. So anything above that means they have to step up to the main index of the JSE. And you can learn more about the difference between the junior market and the main market up here or in the description below. Now, currently, Derrimon has 2.7 billion shares that trade on the junior market, and those shares are worth $7.6 billion or 53 million US. If management decided to issue all 1.8 billion new shares in a successful APO, then they'd have 4.5 billion shares in circulation, and that would raise the market value towards $12 billion, nearly 84 million US. Derrimon hopes to use the funds from the APO to push forward their expansion and to pay down on borrowing, currently at $1.7 billion or nearly 12 million US. Now, the share offer is expected to hit the market before the end of the year, so of course you can look out for a prospectus review right here on Money Mondays JA. If you're interested in this offer, make sure you consult with a licensed financial advisor. Proven Wealth has some great ones. You can find them online at provenwealth.com and on social media at We Are Proven. Now here's what's coming up on Taking Stock.
The COVID-19 pandemic has forced the government to spend an additional $44 billion this fiscal year, with 6 months still remaining before its close. We'll speak with Finance Minister Dr. Nigel Clark, who tabled the second supplementary estimates for the financial year. And later, the analysts weigh in on the latest market developments, a $84 million US loss. That's how much Digicel bondholders, which rejected refinancing terms, are likely to lose on the principal of their investments due to the maturation of 2 bonds that were swapped. And auditors have raised a red flag on SSL Ventures' financial health. We'll discuss.
Don't forget to like this video, subscribe to my channel and newsletter. You can click the link in the description box below. Follow me on Instagram and Twitter at Kalila Ray. I'm Kalila Reynolds. Stay safe.